It's now time to bring you the second segment of the interview for today. Now we're looking at the state of the stock market here in Nigeria, the performance recorded in the month of July, as well as forecasts for the rest of the year. Now, the increase in monetary policy rate by the Central Bank of Nigeria to 14% at its last monetary policy committee meeting has had a negative impact on the stock market, crashing investors' investment value on the Nigerian stock market by 782 billion naira in the month of July. Now, this drop in the value across arose as the Apex Bank's decision on the NPR forced investors to divest to the fixed income market, where the interest rate is similarly much more attractive. According to key performance indicators of the Nigerian Exchange, the all-share index recorded a downward trend to 2.82% to close at 50,370.25 basis points on the 31st of last month, and from the 51,829.67 points at which it opened trading for the month. Meanwhile, market capitalization for the period under review lost by 782 billion naira to 27.163 trillion naira from the 27.945 trillion naira earlier recorded. The stock market in July had also witnessed weeks of sentiment trading by investors amid impressive corporate earnings for the first half of the year ended June the 30th this year by some fundamental companies. Well, joining me now live virtually to discuss this and much more, and also play some forecasts for the rest of the year, I have equity trader at APT Securities Limited, Jamiu Muhammad. Thank you very much for joining us on the show today, Mr. Muhammad.
Good afternoon, everyone. It's a pleasure to be here on the program.
Now, let's talk about the intricacies that played out in the month of July and some of the moves that we saw by investors. We are seeing the market losing about 782 billion naira in the month of July amid the whole push for an increased rate hike from the initial 13% to 14%, talking about the NPR. Your take on what's playing out in the market, especially with regards to the intricacies of last month?
Yes, thank you for the wonderful analysis of what happened in the market. If you look at what you have rightly said, that as a result of a hike in the monetary policy rate in the economy, was the reason why the market fell to that level in the month of July. You can see in the whole month of July, market lost about 2.78%. And in that month alone, it's only last week that we lost about 3.08% or something around that. So what it means is that it was as a result of the release of the result that we witnessed the highest the highest percentage of drop in the market in the recent time. So it's only last week that we lost 3.something% in just a week after they released that the outcome of MPC meeting. So what this implies is that whatever the rate in the monetary market has, it has negative impact on what is happening in the equity market. So because of the investor may likely shift to risk-free environment and go for all this, rate. Though the rates are not commensurate with what is happening because of the fact that we still have our inflation rate at around 17 to 18%, and you want to go for the rate of return of around 14%, even though you want to go by the NPR rate. But as we speak in the market, you see the market, even if you look at ASI for the year, that is for the 6 month or for the half year activities in the market, you see that the market has gained 17%, even that, despite the fact that last week alone, market lost around 3% in the market. So what you have said is very correct and very right, and that is because the rate was hiked by 1%, and the market reacted to that. And we are bound to see that for short time, as we have seen that the report, the financial report of most of these listed companies is bound to be released very soon, though the majority of them are yet to come out. And for the fact that they will soon come out, and we believe that they are going to be good results, better than that of last year, because of the one that has been released so far, they are very good, and it's something that we can bank on. So looking forward to this month, I expect that the market will rebound and it will come back better than what it used to be.
And now, talking about this optimism which you share, do you think that the market or investors' sentiment will likely tilt more towards the fixed income market, or will still see the equities market take the day?
Yes, Mark, I've told you in my earlier stance that even though if you want to go for risk-free rate is not up to what inflation is doing right now. So the only market that can give you inflation-adjusted rate of return is this equity market. So, and the market is now trading lower than what is expected. At this point, you don't expect GTB to be trading around 19 naira, 20 naira. GTB closed 20 naira today, gaining 5 kobo. So you don't expect Zenith Bank to be trading around 21 naira. You don't expect a stock like Access Bank to be trading at this level. So all these are the reason why you see that our market is grossly undervalued. So my optimism is being gotten from the fact that results will keep flowing in the nearest future. All these listed companies supposed to have released their results at the year end on Friday. So as these results keeps coming up, we should be expecting that the market or the investor will react positively to those results and the market will be better. See GTB as we speak this morning, it closed 1995 on Friday, but today it's around 20 naira. So it's something that we should look up to, and I would advise the investor to also look for a way to take more position in the market for the fact that for them to have a long-time horizon in their investment objective, and also sure that whatever they want to invest in, they have to invest in those stocks that have fundamentals. And if you do these two things around your investment objective, there it's going to be a profitable investment in the near future.
Thank you so much for your time on the show today, Mr. Jamiu Mohammed. It's been a pleasure speaking with you. And then we keep our fingers crossed to see how the intricacies are going to play out for the month of August and whether or not we're going to see a stronger rebound from what played out in the month of July. Thank you once again.
Thank you. You are welcome.